Hey guys, Mike here. So another red day in the market, and very interesting things happened this morning. Two in particular. One we had talked about we got to watch out for looking down the rest of this year. Are we getting a warning sign from this sector and stuff? And so we'll talk about that because it was kind of surprising, the news that came out with a bunch of companies that operate in that particular sector. And then of course we're going to go over what is still crushing small caps and the Dow Jones, and then going to NVDA, and then some stocks that are sitting in some very precarious situations. And is it telling us time for a bounce back up, or are we going to see a major implosion in these stocks because they're sitting at some really key areas? Now, as I told members this morning, two things that were the most interesting. One was American Airlines warning about a slowdown for them, and so of course they cut the expectations of what they're going to be seeing this year. So of course they got hammered. Now that could be a company thing, right? So you got to watch out for that. The other one was the discretionary spending. Abercrombie and Fitch came out. They were up nicely today because they raised their forecast. They beat top and bottom line. Dick's Sporting Goods came out. Hey, we love it. They raised full year guidance. Even Chewy, people are spending more on their pets and stuff. And so they look good. So that was discretionary stuff. Those things we don't have to do. And guess what? They were up, right? And so that's something to watch out for, okay? Because again, as I told members, there's a lot of stocks that are going to report in this week and next week, which are sitting at critical levels, right? Bounce type areas. And so we'll see if they get the bounce or not. If they do, that kind of tells us, hey, maybe not as bad off as what we think they are. Now, of course, what's crushing the small caps and the Dow still is the 10-year Treasury. I mean, it's moved back up in this channel, two huge green candles over the last couple of days. And so, I mean, this one right here, it continues to move up. And watch that shaded area. That's where we sold off last time we came up into this, last two times actually. And so if you do continue to drive up in there, it's going to continue to put pressure on small caps and the Dow stocks, but maybe start to sell off back then, even though a lot of people are projecting 5%. Now the Qs, I went and took away my trend line and actually put a real channel in here. As you can see, again, we just can't seem to hold or even try to break above that midline right there to keep this going. And then when we bring up the S&P, you can see I did the same thing. Went and put a channel in here. Again, obviously, the midline has been plenty of support, been resistance. Now we're still setting this resistance, starting almost like curve over at the very top of this as I zoom in. And there's a trend line up here, which one of our members, Case, had put in the Discord. So I went and looked at it and tried to replicate it. And you can see to the penny, we hit that freaking trend line. And the trend line is interesting because it's not like a logarithmic scale. You can put it in logarithmic and still adjust it. You get the same thing. I just do it on a regular chart, right? And that's where we hit the 2022 high right there before rejecting. It goes back to like 07. You can actually drag it back almost to 05 if you wanted to keep pulling it down there. But again, just interesting to see what happens when you put these trend lines and how the market reacts and stuff. And so it would be funny in a way to see if that was actually the top for right now. And so keep an eye on that one. If we can break back above it and then actually make a support, that's what I'll be looking for on this one. And again, anybody can put a trend line on anything, right? But when you start seeing multiple touch points and everything, you can put on logarithmic, you can put on regular, then they become very interesting and actually mean something. So again, we'll see if that was the case or not. And this one's getting affected. You notice the Qs and the SPX, S&P are two different things because SP, those rates going up are affecting it more than what the Qs are doing, right? And so we'll see if that large engulfing candle is going to be the top and we start to roll over to head to the bottom of that channel or not, whether it be short term or not. So that's what we got to pay attention to. But another one is HYG. All right, so this is the high yield bonds, the junk bonds. You can use JNK as well as a ticker. Same thing. But you can see, it's struggling. Again, not below 76, but when we pull the SPY up over this, again, you're seeing HYG has been going down basically in a downward trend right there. The SPY was going up. Now it started to come back down, then it popped again. And so again, there's not a whole lot of divergence. You can say maybe slight divergence or whatever. But when you look to the left and you look at that pattern to the left, and then you look at right here what we're currently going through, they look pretty dang identical. And then of course that's when we had that sell-off right there in the S&P. So we'll see, again, we're just going to keep an eye on it. Nobody's screaming bells and whistles right now in the bond market, even though one thing driving up 10-year yield right now is all these bond auctions for the 5 and the 7 year, which don't seem to be going too well. So I can't wait to see if we start putting out the 10 and 20 coming up here soon, what happens on that. But our debt is becoming riskier to buy. It's just the way it is. Now, one thing also, look at the 5-day moving average. We are below the 5-day moving average. A lot of people like to look at this. We tested those previous all-time highs again for the second time. All right. And so again, when you're above it, everything's great. When you're below it, it's suspect. Okay. And so we'll have to see if we can get this 5-day moving average to start to at least flatten out and turn up. All right. Now, NVDA, again, I'm going to put this video as the same clip in tomorrow's members video, but I'll just say this. Obviously, we are parabolic. It is going straight up since earnings and since they announced the stock split. Again, this is, you look at any company, especially when the market is okay, it starts announcing stock splits, you're going to see crazy stuff like this. But it don't matter what stock it is, what it's doing, eventually gravity will take hold of this thing. That's the way it is. And again, you look at the 10 EMA right there, you can see it normally just kind of hugs it, right? You get some separation here or there. There was 8% separation on the earnings right there. But right now, I think we're like, was it 12% up right now? Yeah, about 12% off this thing right now. And so eventually, you know, it's going to have to slow down so the EMA can catch up to it. It always does. May take some time. Again, we've had these moments where you, okay, we're 6%, we're 8% away from it, and it starts going sideways. The EMA catches up to it, and then we proceed from there. But we still have a lot more room to go until we do this stock split. And so could it continue to run up? Sure. You know, are we expecting these major run-ups like we've just had in the last few days? You know, not so much. You saw today was a quiet day, right? But again, they continue to buy the options. It continues to move up. And so we'll see how long it's going to take for this EMA to catch up to it. And again, above it's great, below it, not so good. So we'll keep an eye on that. And now, instead of going into detail on a lot of these stocks, today I just went through and I was just scrolling through all the stocks, and I noticed, well, a lot of these stocks are just sitting at support areas. And normally when you get at support areas like this, you get a bounce. And of course, we've had some kind of decently rough days in the market. Some of these traded on the Dow, some traded on the S&P, some even traded on the Russell and Qs, right? But when you look, you know, I'm just going to rapid fire this. You got UPS, right, coming in a major support area, goes back to 2020. Walt Disney's in one that goes all the way back to 2015 right now. So it definitely needs a bounce. You know, you can look at ExxonMobil, even some oil stocks coming into nice, decent support, which was resistance, now support, right? You go over to Dollar Tree, again, it's on a trend line right here and coming to support. So this could use a bounce. This has been a hot mess of a stock right there. Then you go over to Uber. Again, it's coming back down, trying to do a support resistance flip right now. That's another one. That's after a really nice, decent sell-off from 80 all the way down to 61 right there. Then you come over to Shopify. Again, still holding this trend line, still holding it. Like a lot of people are actually waiting for this gap to fill below. If we go to the daily up here, you can see the gap I'm talking about. So some people want to wait for that gap to fill before they get in, but you'll definitely see people, you know, roll in if that happens. But again, still holding the trend line, starting to see some, you know, bullish RSI divergence, all that good stuff, but still sitting in a place where needs a bounce. Go over to Snowflake. Again, coming down this trend line once again. It's been bouncing off of since 2022. Can't get out of its own way. Definitely needs a bounce. Boeing, another one, coming back down into this area where it just had support. Needs a bounce. Palantir, again, coming back down close to the bottom of this channel right here, or actually rising wedge, I could say. But then if you look over, what was it? It was resistance. Now you need a resistance support flip right here. So it definitely needs a bounce for sure. Then when you go over and look at the Chinese stocks, you're seeing the same thing. These coming back into these long dated support areas, which may have been support, may have been resistance, but areas of interest that buyers and sellers have stepped in on. Again, JD.com doing the exact same thing. All these are going to look the same, by the way. And so that one goes back to 2014 right there. You come over to Baidu, coming down to area, which goes all the way back over to like 2010, right, where you've seen buyers and sellers step in. Alibaba's not trying to fall back into, if you want to call that the stage one area, you can. But again, coming into an area which has been support resistance many times. AMD, what it do? Came down the bottom of this channel again when it sold off today and bounced. That's where it got its bounce point. So still holding this channel right here. Amazon coming back down to an area which has been a nice area of support right here. Back from, looks like through March. And so that one right there was like it's trying to get a bounce. It still could move down some though, so keep an eye on that one. Then you go over to Apple. Not that it needs a bounce or anything. It bounced off that trend line, but it's just still sitting in this range, right? And it's a big range. I mean, you know, 165 to 199. I mean, that's just where it's at. So it gets out over 199. It's still guilty of something. But again, they may just keep continuing. Right now it's just consolidating, but they may just continue to keep this in this range, right? And so if the market bounces and we start to move up, you could see Apple, right, continue to try to break through that trend line up there and break out over 200 for the first time, which I believe ever. And so keep an eye on that one. Two more real quick. You got the regional banking ETF, right? This right here, you can't see it, but the candle's back down into that shaded area right there. And so that's where we have seen support. And so that's where it's at right now. It can still continue to fall. It's getting crushed by the 10-year as well. Because why? Bonds are going down, yields are going up. That's hurting all the banking portfolios, bond portfolios, which is, of course, what drug these down in the first place, right? Riot, again, sitting, man, it keeps coming back down in this area over and over and over. And so keep an eye on those. And usually when you just get a lot of stocks from a lot of different sectors like coming down into these areas, you're either looking at a major sell-off to continue or really pick up steam, or a bounce because the market all of a sudden starts to try to swing back up, right? So that's really what we're looking at, and why I'm showing you those. Now, when you look at earnings, a whole boatload of earnings tomorrow, right? Especially retail, but you'll have Kohl's, Foot Locker, which I can't wait to show you expect move on that one. Best Buy, Burlington, Costco's a big one. Dell's been on fire. Marvel, which is a semiconductor. MongoDB, Ultima is the makeup one. And look at this right here, Foot Locker, plus or minus 16%. That's amazing. Like, it's more than any tech company on this list. Like, that is crazy to me. Would you have ever guessed that? For Foot Locker for the expected move? And you will have some red folder news that will absolutely affect the market with preliminary GDP, unemployment claims, pending home sales after the market opens up at 10 a.m. And there's some crude oil inventories which may affect oil prices, and also natural gas storage info as well. But again, big expected moves. I believe Salesforce has reported, and they took a dump in after hours as well, along with UiPath, if I'm not mistaken. So we'll see if they get bought up in the aftermarket or not. But again, what were we, 2 days, 1 day away from June now, I believe it is. So we'll see how that works. So tomorrow, of course, I'll do Thursday's video for you. Go ahead and put your questions in for Saturday's video. And then Sunday, we're back to normal with a full week finally ahead. But again, NVIDIA's kind of just like holding up the market up here, even though it had a quiet day. It was red, down 1.5%, but that recovered. And so we'll see if that continues to pump and pump and pump and pump, of course, as people pile into this thing. And again, big money's buying. Like, retail is not pushing a stock that's over $1,000 up that much in that short amount of time. So anyway, guys, hope you got something out of it. Please hit that like, subscribe button if you did. Really appreciate it. And I'll see you guys tomorrow.